If you're considering selling your business, here are the top 5 ways that will likely get your business sold for maximum value. Hi, I'm Trent Lee. I've sold over 600 businesses, and for the last 5 years in a row, I've been named the #1 business broker in the country for the most closed transactions. There's no one who closes more transactions than I do. And I make these videos so that you'll learn exactly what you need to do to better prepare yourself to sell your business for maximum value. The first deal structure that we'll discuss is SBA financing. That stands for the Small Business Administration. They offer various loan programs that can help buyers acquire small businesses. This option is attractive to many buyers who might not have enough capital on hand to purchase the business outright. With SBA financing, the buyer obtains a loan through a lender, and the SBA partially guarantees that loan. The lender's still taking a risk, so the lender still has to underwrite the buyer and the seller through the transaction. But the SBA will help back that loan. An ideal buyer will likely need to have industry experience as well as at least 10% of a down payment to qualify for this type of a loan. The second way to structure a deal is through seller financing. In this arrangement, the seller acts as the lender and provides a loan to the buyer to cover a portion of the purchase price. Seller financing can be a win-win situation. Buyers find it appealing because it shows the seller has confidence in the business's future and its ability to perform. It can also enable the seller to command a higher purchase price for their business, as they may be willing to negotiate more flexible terms with the buyer. What's common is a hybrid approach between SBA financing and some type of seller financing, and we can talk about that more in my next video. Our third deal structure is an earnout. This arrangement is commonly used when there's a difference of the buyer's and the seller's opinion of the valuation, or when future performance of the business is uncertain. With an earnout, a portion of the purchase price is contingent upon the business achieving specific performance targets after the sell. For example, the seller might receive additional payments based on revenue, profitability, or other key performance indicators over a certain period of time. Just keep in mind that an earnout is not eligible with SBA, but a forgivable seller note is, and there's a key difference. If you have any questions about that, call me directly and we can talk more about it. The fourth structure is an asset sale. In this scenario, the buyer purchased specific assets of the business such as equipment, inventory, customer list, intellectual property, rather than acquiring the company itself. In this case, they're still purchasing the trade name of the business, but not the legal entity of the business. They'll form their own entity and purchase the assets. Asset sales can be advantageous for the buyers as they avoid assuming any of the seller's liabilities. For sellers, this can be tax efficient because it allows them to allocate the purchase price to different assets and reduce capital gains tax. Lastly, let's talk about a stock sale. In a stock sale, the buyer purchases the seller's entity or membership certificates or ownership interest in a company, acquiring both the assets and the liabilities. Stock sales can be beneficial for buyers as they gain full control of the company and its assets. On the other hand, sellers may prefer this structure for tax reasons, as they may qualify for more favorable capital gains treatment. The challenge is the buyer assumes the seller's liabilities, so most small business transactions are handled as asset sales rather than stock sales. And there you have it, the top 5 ways to structure a deal when selling a small business. Remember, choosing the right deal structure requires careful consideration of various factors, such as the business financial health, the buyer's financial capacity, and the seller's tax implications. If you found this video helpful, don't forget to like and subscribe to my channel for more valuable insights. As always, if you're thinking about selling your business, consult with a certified business intermediary who can help you and guide you through that process to sell your business for maximum value.